Hi, my name is Mike Dillard, and we're here at the W Hotel filming an incredibly special event today because exactly 1 year ago we launched a revolutionary project called the Elevation Group. And after the crash of 2008, it became as clear as day to those willing to open their eyes that the world had changed forever in ways that impact each and every person on this planet, whether you're rich or poor, young or old. And after watching friends and family members lose their jobs or a good piece of their retirement because of what I see as the negligence of those in Washington and Wall Street, I decided that I was going to turn these times of economic change into unprecedented opportunity for myself and for those around me. So in the coming months and years, most people around the world stand to lose everything that they have as the world is consumed by a tidal wave of debt, one country at a time, and yet many will also come out of this crisis wealthier than they've ever been. Which group you and your family end up in is going to be determined by your ability to acquire the most valuable asset in the world today, which is not gold, it's not silver, it's not oil or real estate, it's information. Knowing what's going to happen to the financial markets around the globe and how to use that information to position yourself for security and for profit is the key to a prosperous future today. So in December of 2010, I began a personal adventure around the world to unlock the investing strategies being used by the ultra-rich today in order to find out what it is that they're doing with their money and then share that information and those insights with the rest of the world through my online diary. Now, I'm not a financial advisor or investment guru of any kind, really. But what I've discovered has been so profound that it has literally changed my life and the lives of tens of thousands of people around the world who have participated in this project with me over the past 12 months. So what have we uncovered and how have we benefited? Well, that's why we're here today. To help commemorate our first anniversary, I've invited 12 members of our group to join my financial team right up here in Austin, Texas, to share their stories as we hold our 2011 year in review. So while the video of today's event was going to be for the eyes of our members only, we've decided to open up this footage to you and the rest of the public in order to let you see with your very own eyes that despite all the bad news that fills the airwaves on a daily basis, there is a group of real people from around the world who believe in a better future for themselves and their family and who are actually doing something about it. So for those of you who will be watching this at home over the next few days, we're going to edit today's event into 3 different parts. In this first segment today, we're going to look back over the years and find out how the radical predictions I made back in 2008 have fared. Then we're going to share our predictions for 2012. With the world changing at a pace that's faster than most people can even comprehend, understanding the risks that will impact the financial security of every single person watching this will prove critical to your prosperity as we enter into what may very well be the most important and anticipated 12 months in modern human history. In part number 2 of this video series, we're going to get into really what I see as the once-in-a-lifetime opportunities that all of these challenges are creating. This is what the Elevation Group is all about, turning doom and gloom into personal prosperity with inside knowledge and strategies that most people really don't even know exist. The worse the global economy gets, the more money our investments make. So in this segment, I'm going to pull back the curtain and show you some of the most profitable investments that I've made over the past year, and I'm going to introduce you to some of my advisors here who've helped make that possible. And in fact, I'm actually going to throw up a scoreboard right here. This is going to be quite a bit fun a little later at the end of part 2, and we're going to actually compare our results against the world's biggest hedge funds, investors, mutual funds, and even Mr. Warren Buffett himself, which should, again, prove quite interesting to say the least. Now, finally, in part 3, we're going to take a look at what's next for the Elevation Group, our growing agenda to change the world for the better, and the global movement that this project has created. We're going to discuss the top 3 to 5 investment opportunities that are coming up on the horizon and how you can take advantage of them no matter how rich or poor you may currently be. This is your time and your opportunity to take back control of your financial destiny. So grab a pen, grab a piece of paper, because we are about to get started and dive into a world that will leave you probably speechless and much more hopeful, to say the least. And I'd also love to hear your comments and questions in the comment area below. As you'll soon find out, this is some incredibly important information that's going to have a very real effect on the prosperity of you and your family in the years to come. So please feel free to share this page with those you care about using the like button and the share buttons below. I've also sent a replay link to this video to your inbox from my email address, which is mike@theelevationgroup.net. And you're actually going to be able to spot it by the subject line because I've put the letters EVG right in there, and that's going to be in every email that I send you for all the replays of the segments coming over the next week. So welcome. I'm looking forward to getting started. Let's go ahead and dive in. So I thought it'd be fun to pull out a newsletter that I wrote back in June of 2008 for my old company, and this was for our private subscribers at the time, because this is really when I first started writing about what we're going to talk about today, which is a lot of the challenges that are now coming down the pipeline and that really got kicked off in 2008. And I was already way down that rabbit hole in 2007, and this is, again, the first time I actually started telling other people about it and opening myself up to being a tinfoil hat-wearing conspiracy theorist. So, you know, the advice in this newsletter was essentially, the world's coming to an end as we know it financially. Go buy a lot of gold and silver and guns and food. And this is a newsletter for internet marketers who are, you know, building a home business, so it was a little bit out of place at the time. But that was written in June of 2008, and lo and behold, in September of 2008, we have the Lehman Brothers crash. And that was the big wake-up call for everybody, obviously, that made this very real. You know, that only served to really further our convictions, and at least my conviction in what I saw was coming. And a lot of people thought I was nuts, even my business partners and guys. I was like, hey, every month we need to start putting some of our profits aside in gold and gold coins so that, you know, if inflation starts to kick in, we'll be able to pay our bills and all of that stuff. And like, they're like, oh, okay, yeah, whatever. And we ended up putting, you know, I think 50 to 100 ounces of gold in. We ended up buying around 50 to 100 ounces of gold at the time. And that, again, that was back in 2008 when gold was around $800 an ounce. And lo and behold, you know, it is doing exceptionally well since then. And if you take a look at what's happened over the last 3 years, it's just the dominoes are just falling one after another, just like we've been talking about. Today, most specifically, we're looking at the euro and what's happening in Europe right now with the collapse of Greece. Italy is now toast. The leadership, Berlusconi, has been axed. You know, as of a week ago, he's been replaced with a banker, which I find pretty interesting. And the U.S. Credit rating was downgraded, or was essentially put on notice this year in 2011, which has never happened in all of American history. And people have just been saying it's going to be fine. This is just a normal cycle. Things are going back to the way they were. You know, just keep your money in the market. Don't make any changes. It'll all be good. And hopefully by now, people are starting to wake up because it's starting to get towards the end game in this process. And like we've mentioned, all of these tragedies come with an equally great opportunity and an equally great silver lining, as long as you have the one critical ingredient, which is information, and that is the most valuable commodity in the world right now. You know, people like to think of it as gold and silver, and I say, well, gold and silver is not going to do you any good if you don't know when to sell it. You know, because the bubble in that area is going to pop at some point, and a lot of people, just like those who bought into the real estate bubble towards the end, are going to end up getting screwed with gold and silver at some point. So information is the absolute key to all of this. So why am I so convinced that really we're going to see the biggest economic collapse in human history? Well, primarily it's because it's a mathematical certainty. It's as simple as 1 + 1 = 2. You can't get around the math on this. And the bottom line is that the world is awash in debt. Every major economy is now interlinked, and they've gotten really into this, you know, debt orgy. I don't really know of any other way to put it over the last 10 to 20 years with derivatives and, you know, packaging, as we saw with the real estate bubble, bad loans, and then reselling those from nation to nation and reselling all of their sovereign debt, you know, everybody in this nice little circle. And it's all built on debt. The entire global economy today is when you sit down and you think about it, it's absolutely amazing. All of the buildings that you see, the hotel that we are sitting in right now, the house that you're living in, every major commercial building downtown, I'll probably ask you guys real quick, what do you think out of a fraction of all the global development, let's just say in real estate alone, is actually paid for? It's paid for. There's no note on it. There's no liability.
Very little. I mean,
3%, 5%?
I don't know the percentage, but it would be very, very low.
Right.
Yeah.
Every major corporation today is dependent upon lines of credit to keep their business running on a daily basis. So it's all built at that point on a house of cards and a house of IOUs. And the problem with that is that there reaches a point of what I call peak debt, of saturation, where every IOU that is then issued is just worth so much little and so much less, and the liabilities behind it have grown so great that nobody wants to touch it anymore, and they've now realized that, hey, maybe there's a chance that we're not going to get paid back on this. And it's that inflection point when things start to fall apart. And unfortunately, that is the entire global economy. So when you look out at the United States specifically, just today, I find it incredibly ironic that, and we're not going to get into politics during any of this. For the record, I've never voted for a U.S. president because I don't see the point. And I think there's a lot of people in my generation who feel the same way. And I think this example is perfect. Obama's part of his big ticket when he ran was no more debt. We're going to reduce the debt. I'm going to cut the debt in half by the end of my first term. Well, and Bush is at equal fault for all of this as well. So, like I said, it doesn't matter who's in office anymore. Today, we just passed this week the $15 trillion mark in debt. We were at $10 trillion when Obama took office. So not only did he not cut it in half, he increased it by 50%. And as much as I'd like to say it's not his fault, it really isn't. There's not much he can do about it. When your entire infrastructure is built on issuing debt to pay the bills, and you're creating a new credit card to pay for the interest rate and the bills on the first credit card, and your next credit card is bigger and then bigger and then bigger, there's nothing you can do about it. He didn't have a chance. There was no way it was going to stop. So that's where we're at today. And if you look at the United States GDP right now, it's right around $14 trillion. That's what we're producing on an annual basis. A third of that, well, before we get to that, we just passed, again, the $15 trillion mark in debt. So we now owe more than we're making as the most prosperous country in the world, right? A third of the taxes that are collected every year goes to pay the interest on that debt. And if that debt is growing on average right now between $1 and $2 trillion a year, that deficit, I should say, next year GDP we'll say is around 14 trillion again. The deficit's going to be at 16 to 17 trillion. Excuse me, the debt will be. And that's just more interest. So there's no way out of this. It's a mathematical certainty that this is all going to collapse. And the government's big solution to this giant problem is what it's always been. Hey, we're just going to grow our way out of this. Don't worry about it. We'll flood the market with liquidity. We'll get us through this recession, and then we're going to get back on that track of exponential growth, and we're going to grow it. What is it? Their projections were 5 to 8% per year, starting in the next 3 to 5 years, something ridiculous like that.
It was unrealistic.
And that's what's happened in the past. So, you can't blame them for thinking that. But whether they're that naive or they just want the public to stay that naive is, irrelevant. Now, when things get really interesting is when you take into account unfunded liabilities. And right now, we officially on the books have $15 trillion in debt. Great. But that doesn't count Medicare, Medicaid, Social Security, or any of those essentially bills that are paid, that are coming due. The money's already out there. These are liabilities that are on the books that we've got to figure out a way to pay. When you account for all of that and all of the derivatives, it comes out to around $700 trillion. They've got to be paid, they've got to be accounted for. And obviously there's no way to pay that off. It's just this giant, huge bubble of debt that there is no solution for, but there's two ways to get out of. So Before we dive into those solutions, though, let's talk about why growth is not going to happen here again, and why, at least I see it, especially in the United States, we're not going to have the growth that the politicians in Washington are counting on. The reason for that is peak energy. And peak energy is what many people like to call as peak oil. And we passed that inflection point in the 1970s and 1980, where we are now consuming more or less, we are now consuming more oil than is actually being produced. But the issue is that there's not enough net excess energy available to fuel growth. To have growth, you have to have all of the energy accounted for to take care of everything that you're doing today, and then you have to have cheap energy that's left over in excess to then go put towards growth, building roads, agriculture, everything else. And that's not possible when the amount of energy that, again, is available is declining. It's getting more expensive. And the interesting part is that we live in a world, in a global economy that has been built around this little sweet spot of oil prices. Walmart and the Chinese export economy has been built around a standard level of oil price, let's say 80 to 90 bucks in that range, to where it is cheap enough to manufacture and then ship bottles of water from one side of the planet to another, Q-tips, little toothpicks for your cocktail drink, over a boat from China to the United States. It requires a certain level of oil price. And we've got two factors or two dynamics that are coming into play right now. Global population, which just this year hit 7 billion people, it's increasing right now at a rate of about 22%. So over the next 25 years, that population is going to hit around 9 billion, and there's nothing we can do about that. Aside from some incredibly tragic war, or someone forgets to close the door in the biotech lab and some kind of zombie creating disease is let loose. That's going to happen. It's just the momentum of the species. It's going to carry us from 7 billion to 9 billion people, 22% increase in population. And to kind of put that in perspective, 200,000 new babies are born every single 24 hours. 200,000 new mouths come into the world every 24 hours, 7 days a week, that need to be fed, and that need water, and that need housing, and that need essentially oil, because all of that stuff is dependent upon oil. And Austin, city of Austin is what, about 1 million people? Are we at that point yet? Yeah. So every 5 days, a new city of Austin is dropped onto the planet somewhere, which is crazy. That just boggles my mind, and it just doesn't stop. So we're running into this inflection point where we're running out of oil. The prices for oil are therefore going up, yet we have more mouths to feed that are dependent upon cheap oil in the economy the way that it exists today. So we have all of these factors and these dynamics that are coming together in kind of this perfect storm, that I really can't think of any other way to put it, that's just going to create this giant reset button globally in every area that we can possibly imagine. It's happened many, many times throughout history. Never to this scale, because the economies have never been interlocked the way that they have today. But it's this boom and bust cycle, and this one's going to be the biggest ever for the reasons that we've just gone over. So talking about the peak energy, let's actually take a look at some of these charts. And as you can see here, in 1979, we passed that point of cheap and easy on the bell curve and into a realm of diminishing returns that we really have no solution for. This is, again, known as peak oil. Peak oil doesn't mean that the world is going to run out of oil. That's not going to happen. What is going to happen is that we're going to run out of cheap oil. Now, right now, the U.S. consumes about 25% of the world's daily oil supply, and it imports more than 70% of that amount. Now, unfortunately, that's not going to continue, because we're dealing with these two graphs here and the numbers that they contain. Now, the first one is a chart that shows us the progression of new oil discoveries over the past 100 years. And what we need to understand is that the amount of new oil being found has been rapidly declining since 1970, as you can see on the chart. Now, the second graph shows the level of depletion of existing oil reserves and export rates, which is both pronounced, as you can see, and accelerating. So as of 2008, 42 out of the largest 50 oil-producing countries had entered into decline, In 2009, the IEA, or International Energy Agency, confirmed that global oil production is currently declining by 9.1% per year. So as you can see, this is actually happening, this is inevitable, and this is that glass ceiling to new growth that is going to prevent it from happening, and there's really no way around it. Solar's not going to do it, wind is not going to do it. You know, natural gas is a potential opportunity that's coming up, but is it going to come into the world in such a widely accepted format in time to help really stave off this giant train wreck that's on the way? I don't really think it is, and I haven't found any expert that thinks it is in the oil industry either. So is this it for growth? What about China? What's going on in China? What's going on in Australia? Well, you know, the way I see it is that you're going to see pockets of growth, and you're going to see this widening gap. We've already seen this huge gap of income disparity that's become very apparent socially over the last couple of months. But if you look down and you imagined, you know, the map of the United States or the globe, it's almost as if it's covered in water and that water is evaporating, or there's little drops of it that are moving to little hot spots around the place that have strong enough economies and where there is enough wealth that's concentrated to where they're going to continue to see some growth. You know, the tech industry and the biotech industries here in the United States, cities like New York, Texas, for example, over the last 3 years, 50% of the job creation that actually has taken place in the United States, those 50% of those jobs have been created in Texas. And as we're going to hear about later, the real estate markets here and the job markets here are infinitely stronger than any other place in the country of the United States. So all of those little drops of water and wealth are draining down into the state of Texas. And there's going to be little pockets of growth in China, Hong Kong, Singapore, places like that. So, you know, the idea of growth is not dead for certain specific niches, but it is for overall sovereign nation economies.
China has some issues as well in that they've had a large influx of the farm boy moving into the city to find a job. And as their economy is in flux now, and the government is purposely suppressing the economy so it doesn't move as fast, now the farm boy says, well, there's nothing here for me, and it's moving out. And that's going to leave a large gap in the real estate market there. Mm-hmm. So they have their own issues as such. And there's also talk of Brazil and China being the new bank, if you will, for the rest of the countries. The problem is kind of like me saying to you, hey, let me sell you an IRA LLC, and by the way, I'll fund your LLC at the same time. And so there's a dynamic there that doesn't work. And so there's some issues there that need to work out between all of these countries and how they're going to position themselves again. We have to be the consuming nation that we've always been to make this thing work.
That's the whole thing is the model is breaking down because there's too much debt. You know, no, I'm not going to go into that, but all right. Well, the reason I am, you know, you'll see little pockets of growth in China, but why I would probably never vote on China to save the day in general is because who in their right mind would give money and invest money in a country that has a fake Apple store popping up like every week? Like they have literally 20 to 30 full-blown fake Apple stores where they wear the blue shirts and the name tag and they have the little tables with the items set up. All of the employees working there literally think they work for Apple. They don't even know that they're taking part in a scam. And you see that with the fast food chains as well. You know, and that on top of
pharmaceutical companies too.
And
Still come to see, which is basically what debt tends to be.
Yeah.
And if China continues to subsidize their own companies, that's not true growth.
Right. It's like, you know, the Fed stepping in and saving GM.
Right.
It's not growth at all. It's injecting a sick
Put a
patient
Band-Aid
with
on.
yeah, totally.
Yeah.
So, you know, it's like, I just can never foresee a country like China filling that number one position that the United States has led when they don't have the, as a nation, the moral integrity or judicial justice system that is necessary to have a set rules of the game, which is so critical to play by. And that we're going to talk about this more in part 3 of this series. But many of the problems that we're seeing here today around the world, and especially unfortunately the United States, because we've always been the beacon of hope and representation of truth and justice, in many ways has fallen to the wayside. And you see this week of what's happened with MF Global, and these guys have run off with $700 million in customers' funds, and they haven't even been arrested yet.
Yeah, I was gonna say, what did Bernie do, so we won't do it?
If I can throw one more comment into it, I don't know if you want
Yeah,
comments or
Sure.
not, but this week really surprised me because you were talking about your newsletter, the doom and gloom from 2007. I got to tell you, when I saw the news images in New York City, the Brooklyn Bridge being closed by people who are pissed off, they're not even sure why they're pissed. They know that something's going on. They don't have all this information, but they know something bad's about to happen, and they know they are being relegated down to not even the middle class, to poverty. It's the anti-American dream. So when you see it in masses that they're actually starting to take the Brooklyn Bridge over, you're getting some sense that this is, you're going way beyond conspiracy theory, and the people are getting a taste of it. They just don't know what's really about to happen and why it's happening. So
Right.
Which
that
makes it
really
even
shocked me.
scarier.
That really shocked me to
When
see
it happens,
those
in the
kind
Middle East, it's one thing. You see it on the news. No one here touches it, feels it.
No.
I mean, wow, look, they overthrew the government. Well, look in your backyard now. Walking here, right at City Hall around the corner, tents are set up, and people are just saying, hey, wait a minute here. What about the 99%?
Right, exactly. The message that we're trying to bring, at least in this very first segment of this series, is we've been talking about this for 3 years now. If you're still on the sidelines and if you're still kind of like, that crazy dude's wearing his, damn hat and he's sitting there at his ranch with his guns waiting for the world to end, don't come to my ranch when it happens. No, the point is,
Come with the white flag.
is this is really happening, and it's going to get worse. And so you have two options. You can ignore it and put your head in the sand and go down with the ship, or you can turn it into the biggest opportunity of your life. And something that I took to heart from Michael Maloney is the idea that wealth is never destroyed. It's just like energy. Energy is never destroyed. It's just transferred from one state to another. Well, wealth is never destroyed. It's just transferred from one person to another, or one form to another. So if we have trillions of dollars in what is still today, in some form or another, considered a form of wealth, it is soon not going to be. It is soon going to be transferred, as it has throughout history, to one thing, primarily, which is gold and silver or precious metals. And you've seen this happen hundreds and hundreds of times over the last 2,000 to 3,000 years of history. Is gold and silver is really the only real money out there or asset that doesn't have any third-party liability tied to it. If you have it, you have it. And the people who have it are the only people who are going to have it. And an interesting part about this that most people don't know is having physical gold in your possession is really the only thing that counts, because there's been some articles out over the last couple of years that most of the major banks like JP Morgan and Goldman Sachs and these bullion houses have leased out their gold on average 50 to 1. Mm-hmm. So for every 1 ounce of gold that they have sitting in their vault, they've gone and sold the rights to that gold to 50 different people who don't realize that. And it's just like leverage in any other form, reselling derivatives over, loans over 50 times. They've done it with the gold. And what's happened is, over the last 2 years specifically, the big players in the world, the big investors of the world, the really savvy people who have been paying attention, have figured that out. And right now, behind the scenes, there's this massive currency war going on to scramble and grab as much physical gold that you can literally get your hands on. And if you need to know why we invaded Libya, that's why, because they had hundreds of tons of gold in their possession. Well, actually, they had it at the New York Fed, and Gaddafi said, hey, I want my gold back. We're going to repatriate it. I want our hundreds of tons of gold. Send it over. And a week before it was due to be transported, he's done, dead, right? So that's why. There's a scramble for the real stuff. And I'm going to show you guys something pretty cool out here a little bit later. And that happened in 2008. After the collapse of Lehman, there was a scramble for precious metals, and there came a time where you couldn't find any if you wanted to. All of the suppliers that I used to buy from, done. I had to actually order it off the COMEX and take delivery of a bar like 2 months later. So all of that's coming, and the point of this is to, hey, wake up. This is what's going to happen. This is why it is absolutely inevitable. And if you want to turn this into an opportunity and be the recipient of this wealth transfer, well, that's what you're going to learn how to do over the next 3 videos here today. So let's talk about how the U.S. government's going to handle this. Well, they've really got 2 options, and it's the same with every other government in the world, but U.S. has a really special ability that nobody else does. Historically, you can default, and you can say, hey, we can't pay this, and when that happens, interest rates are going to skyrocket like we've seen happen in Greece. They say, hey, we can't pay this anymore. It's happening with Italy right now as well. Their interest rates on their debt and their bonds skyrocket, which means they can't afford to pay the interest rates, and they're dependent upon borrowing money from Germany, from us, from everybody else to pay their bills. Nobody wants to lend them any money anymore. We know that you're bankrupt. So they're screwed. But unfortunately, you have this intertwining of debt liabilities once again, to where if Greece goes down, Italy goes down. If Italy goes down, France goes down. If France goes down, Germany goes down. And if those guys go down, we all go down. Right. And default would be, man, just an unbelievable, unprecedented scenario on a global scale that, again, has never been seen before. And it would be total social pandemonium chaos, where the checks, imagine if the checks for all of the public workers in the United States, what does the government account for 40 to 50% of all the jobs today in the United States? You know, including military and police and everything. So imagine if the US government goes bankrupt and 50% of the people in the United States, the police officers, the military, your social workers, stop getting a paycheck. That's going to be crazy. People need to feed their families, right? It's going to be nuts, and this is what's going to happen on a global basis. So default, even though it's what needs to happen and what nature wants to happen, and that's what's natural, for the people in power, it would literally mean, you know, I'm going to take some words from Max Kaiser, the guillotine. Maybe figuratively, maybe literally. Like, seriously, that's the point where it would go. So those in Washington and those in Wall Street, there's, as far as they're concerned, there's no way that they can let this collapse. So their only other alternative is to use the one tool that they have left, which is the printing press. And at the end of the day, that all comes down to the United States, because we're the only one, really, country out there is the global reserve currency that can go, you know, again, print our own money at an unlimited amount. And if you want to look at these images here, this is how much new money the Fed has printed since 2008. It took 84 years from 1913 to 2007 to put $825 billion into circulation. 84 years to do that. The Fed doubled that number within the first 24 months of this crisis, trying to keep this bubble inflated. So as a result of that, this chart shows how fast your dollars are losing their value, falling 15% in just the last year alone. So unfortunately, they have to print because they're not going to go into default. Every time they print more, the money that we're holding, you know, becomes devalued. You've seen the prices in gasoline go up. You've seen the prices in food go up. And it's happening more so in other countries because the United States is kind of exporting our inflation at this point. But those dominoes are going to fall. All that's going to come back home. And I think within the next 1 to 2 years, you're really going to see some crazy inflation here in the U.S. I'm definitely in the hyperinflation camp because, again, one of 2 options. They're not going to default. They have to print. If they have to print, it leads to one conclusion, the devaluation of the currency and ultimately hyperinflation. Now, there is a way out of that, which I think that they will take at some point, which is to go ahead and then peg the dollar again to gold. Either way, gold wins. Hyperinflation, gold wins. Peg the dollar to gold, gold wins. So at the end of the day, again, gold is the only real salvation here for any of these problems. The other side is if they default, then you want to have cash on hand and you can go buy buildings for pennies on the dollar, which, you know, I'm fine with too, as long as you can survive the chaos, right? So that's where we're at today, and those are the 2 options. So what are our predictions for 2012? Well, frankly, they haven't really changed much since 2008. We are, again, still in the middle of all of this process and all of this unwinding, and at the end of the day, if you look back at history, you know, it's ironic, most people have never heard of the word hyperinflation until, you know, this language started hitting the internet over the last 3 years. It's happened in 30 different countries over the last 100 years that have gone through hyperinflation. The most famous is Germany after World War I in Weimar. It's happened twice in the United States during the Civil War and the Revolutionary War. So it's going to happen here a third time, at least I think it is. And the other part that you need to take into consideration and why I think this is inevitable is because out of the hundreds and hundreds of fiat currencies that have been created over the last 2,000 to 3,000 years, not a single one has survived. It's a 100% track record. If this is a bet that you want to make, you're going to win. It's never been wrong. It's just a matter of getting the timing right. When does that actually take place? Well, the average life cycle of every fiat currency is 30 to 40 years. The essentially new dollar was created in 1971 when Nixon took us off the gold standard, and the dollar became truly 100% fiat. It's the end of 2011, 40 years. We're coming up to the end of our dollar's historical life cycle, and everything that we're witnessing today is kind of like the death throes of all of these factors coming together. And so again, we're either going to have, I think, in the next 1 to 3 years, a new currency completely, or going back to the gold standard and having essentially a new currency in that regard. So a couple of other predictions. Obviously, oil is going to continue to increase in price over the long run. In the short run, it's irrelevant. 200,000 new mouths to feed, 200,000 new blankets to manufacture, bottles to manufacture. Everything's made of plastic. Everything has to be transported via trucks. Everything, our entire world is literally made of oil. So that's going to be an issue. Food's going to be an issue. Water, fresh water is going to be a huge issue. We're going to talk about that more in part 3 of this video series. I think the euro's done, most likely in 2012. I think this is going to be the year of reckoning. It could happen any day now, or they could find some way to postpone it till the end of the year. I say there's a 90% chance that by the end of 2012, the euro will not exist in its current form as it does today. Now, we know that a lot of people have asked, do you have any thoughts about the irony that all of this is happening in 2012? The conspiracy side of this, and everybody knows the Mayan calendar and December 21st and how the world's supposed to end, or a new consciousness is going to be created and we're going to go to the next level of evolution. I don't know. I don't care. I don't really worry about that on a day-to-day basis. But I do find it very ironic, and it does make you sit back and think that, very interesting that all of this is happening, and at this time and place, and that the world, I guarantee you, this time next year, will look very different than it looks today, right now, in December of 2011. But what I do have a thought on regarding that is thinking like a politician or thinking like someone in power. You have this date that's burned into the consciousness of a global population. It's just such a story that people have been talking about for so many years that you think back and you look at Hillary Clinton a while back said, never let a good crisis go to waste. And I find that pretty interesting. And if I were in a position of power and if I were in a politician and my world was going to hell and I was desperate for something, that it would be quite convenient to do something around that type of, around that time of the year and around that date. Because at the end of the day, you can say, look, it was fate, global cosmic fate. It was meant to happen. It was out of our control. This is what the Mayans had been predicting. And to use that kind of an event that they would manufacture to then go do or restructure the world or restructure the global currency system or whatever, and then use that kind of as the global cosmic scapegoat. All right, guys, well, I thought it would be a lot of fun to have each of you share your one big prediction for 2012 and or beyond, because I know that's a little bit restrictive of what you see coming down the pipeline. It can be for the U.S., for the local market, but we're going to focus on what are the challenges that you see coming, because in video number 2 coming up, we're going to talk about the opportunities, and I know that's what all of us are most anxious to talk about. But first, we need to create really the awareness of, hey, what's coming down the road, so how can you protect yourself first? And then we're going to talk about how do you profit from that and position yourself for prosperity. So, and actually, I wanted to see, I know Sean, Paul's partner at Renaissance Companies, wanted to come in and share some thoughts on Europe as well. So, Sean, why don't you come on stage up here, and we're going to tag team out.
Here's Mike. big analyst anyway, so this will work out perfect.
Yeah, and then Paul's going to join us here for video number 2.
Great.
So Sean, you had some thoughts. What is your big prediction about Europe?
Well, you know, what we're seeing is that currently, if you look around the globe, who's going to save Greece in the next bailout? You know, we're looking at the Troika. We're looking at Germany, France, and Spain kind of stepping up to the plate saying, hey, you know what, we'll fund this next round of bailouts. But the reality is that there are no creditor nations in Europe at all anymore. Everyone's a debtor over there. You know, a lot of people hold Germany out to be this beacon of financial security. They've defaulted twice in the last 100 years, and no European country has recapitalized their banks yet.
They're the least worst off.
Sure, sure.
Yeah.
I mean, you know, Germany itself is 80% GDP, and they haven't recapitalized their banks.
Yeah.
So, you know, when the euro breaks, what we see is that there's going to be a flood of capital from Europe coming into U.S. Treasuries, most likely.
Yep.
You know, and so you're going to see a little bump up in the U.S. dollar,
Right.
which is going to do what to gold and silver?
Yeah. I say it'll stay right where it's at.
You think so?
For the time being.
Yeah.
Oh yeah, it's a good portion of that money is going to go into metals too, because, you know, I think it's going to go into dollars because that's the easiest, it's most liquid. But I think the really smart players that get their hands on it, like Kyle Bass that you were talking about earlier, are going the step beyond that, which is the last domino, which is metals.
Sure.
So.
Yeah, I mean, as the strength of the dollar increases,
Yeah.
it's probably going to increase against gold and silver.
Right.
So you may see a little pullback.
Yep.
Which is a great buying opportunity. You know, I love the line that you had in one of your entries, your posts recently. You said, if that happens, I'm backing the truck up.
Sure.
I love that line.
Yep.
It's such a great visual.
I am happy to buy as much as I can under $2,000 an ounce. That's kind of my foot, you know, my glass ceiling, because there comes a point where you got to stop buying. And for me, anything under $2,000 an ounce I'll buy, but at that point, even if it goes up, you just got to stop, and you have to say, hey, that's my position, and
Sure.
let it go where it may be.
Sure.
So awesome. Very
Yeah.
good. Thank you.
I mean, we could see gold pull back to 1,400 an ounce is what we're seeing. Maybe silver back to 25, possibly.
Possibly, yeah.
But then, you know, once you got to think about it realistically in terms of just common sense. When the euro breaks and you see this flood of capital into U.S. Treasuries and the value of the dollar increases,
Yeah.
silver may dip a little bit. Once that happens, investors are going to wake up and they're going to see that the United States, the debt problem that we have in the United States is twice as bad as over in Europe. Once they wake up to that realization, the dollar's just going to fall off a cliff.
Yeah.
And so that's where you don't want to get caught with your pants down, basically.
Absolutely. Very good.
So-
Thank you. Dan, what's your prediction?
Well, I wish it was as well versed as you guys are in this, but in my little world, and that's the retirement aspect of what people have, there's one looming question that seems to be coming up over and over and again. And that's, is the IRS, is the government going to take over your pension, your IRA, your 401k? I don't know. There is a possibility about that. But I can tell you this, that you can be protected and you can stay one step ahead of that. How do you do that? Well, you're the one who's in control. You're the one who can take your assets and you can place them under your control. Whereas if you are with Lehman Brothers, if you're with Goldman Sachs or whoever it is that you're with, Fidelity, which most people are Fidelity or Charlie Schwab, well, that's the first place the government's going to go, is where the easy pickings are at. And they're going to abscond with those stocks and then start to build into the treasuries. That's what they need to do, is they need to build the treasuries. And it just happens to be there's enough money in the retirement funds as there is in the need for the debt. So that could be their bailout to our problem, for the masses, if you will. So if you have real estate, or if you have gold, or if you have some other metals in there, well, you can just pay the tax. Just pay the tax and the penalty on it. And at least you'll have your assets in place for what you need. All the government cares about is, where is that value that they owe me under the arrangement that I have with them in their IRA or their 401k? So my prediction would be that is, if this were to come into place, then you can take measures that you can protect yourself with. these, I don't know where the dollar is going to go. I don't know where the euro might happen. I tend to believe that the euro does have a very short life. And perhaps Germany can pull up another thing. I don't know, these guys are pretty creative. They have a way of being able to, pull the rabbit out of the hat and then make it look good for a little while and keep the confidence up for a little while. But the people on Wall Street, these OWS people, you're absolutely right. If you take a look at what they are complaining about, they really don't know. And it's just given an opportunity for different factions to put up their little banner and say, well, we need to work about healthcare. We need to work about pet protection of all things, or whatever it may be. And it's given a platform for the 99% to talk about. Well, that platform will soon start to evolve into a greater consciousness, and that consciousness will then start to erode the middle class. Once it starts to erode the middle class, then we're having a lot of problems. And the fortunate thing about everybody here in this room, and hopefully those that are listening to this broadcast in the future, is that you have the opportunity to protect yourself. You have the opportunity to now take control and take those measurements that are necessary, so if these things do come about, then you're there. Because once people do understand that they need to have precious metals or whatever, it's Katie bar the door. Where is gold going to go? $5,000 an ounce, $6,000 an ounce? It'll be just like the real estate bubble in 2005. Everybody was buying real estate, and then the bubble came. So take time now. Take that opportunity that you have, and let's take and control things for your family, for your loved ones, those you can help.
Very good.
I think it's important to also address that, the stocks are not bad. 401ks and IRAs are not necessarily bad things. It's just right now, I would rather own other assets. It just doesn't make sense for this time, this historical period of time. It doesn't. And if you drill down on that and you go even deeper, the real issue with Occupy Wall Street and the frustration that people are feeling is that there's an underbelly of corruption that's happening at our federal level. And it's happening in every country. Greece just got a bailout of $600 billion a few months ago. And part of the deal was that they had agreed that they would let 10 federal employees retire before they hired one new one. All right? It was a 10-to-1 ratio. 10 federal employees had to retire before they hired one new one. Well, they just did an audit of that whole bailout. And Greece and France in particular wanted to see the numbers. And they realized that they came to the conclusion that in the last 2 months, 28,000 federal employees have been hired in the last 2 months in Greece, and only 26,000 had retired. So they're not even following the rules of the game that they agreed to.
Share the garden story, because I think this is classic.
In Greece in particular, the structure, the whole structure of their financial system is essentially a welfare state. The hospitals in Greece are supported by the government. If they can't pay the bills, if they can't keep the lights on, then the Greek government has to step up and pay the bills. So again, they came in and did an audit, and what they discovered was the #1 hospital in Greece had 46 gardeners on staff, full-time employees. And the worst part about it is they didn't even have a garden. Okay, so what are we doing here? I think that the people are starting to wake up and realize that it's that level of corruption that is the problem.
Yeah.
And so that, even though Occupy Wall Street and movements like that may not be cohesive at this point, there is a definite shift. There is a definite shift in our society and in our fabric.
Very good. JP, biggest prediction, challenge you see on the horizon?
Biggest prediction, I think, and challenges, I think, with real estate, even though it's a hard asset, be careful, because it's not as easy as gold. There is a lot of different kinds of real estate, and I do think that, back to Mike with what you're saying, without growth, how do you fill an office building? Without growth, how do you expand retail? And I think that there's a lot of people who don't really understand the difference. They think of real estate as a hard asset. Do not get caught in that trap. And I think one of the traps out there right now is some of the REITs are paying really good dividends, like 15% right now. It sounds wonderful. In fact, I had an investor say to me, JP, I'm in this fund, in a real estate fund, and I'm making 15% and 20% a year. I said, so tell me about the underlying asset in this REIT. What do they own? They own retail centers. And I'm like, if you want to earn 22% on shares, you don't own the real estate, by the way. It's the same game. It's a derivative. You own a share of a portfolio of retailers. So if you think there's going to be stagnation, why that? It's kind of a game. And I think that game, more and more people are starting to realize that, especially people who don't understand real estate. I really think the REITs are really going to, these numbers you're seeing was a 2011 game. I think you're going to see some sobering up as some of these things come into play amongst the REITs. Those dividends are going to go away, and you're going to realize you didn't own real estate, you own shares. Yeah. And those shares weren't worth nearly as much as you thought.
Just
so
like
you got
shares and
22%, but you lost a third of your money.
Yep.
So you do the math.
Yeah,
You
absolutely.
got to focus on that counterparty risk that you were referring to before. And I love the way Maloney phrases it. He says, if you look at gold, gold has no counterparty risk. There's no CEO that can die and affect the price of gold. There's no board of directors that can make a decision that will affect the price of gold. It's just a lump of metal. But when you're looking at other asset classes, you got to look at the counterparty risk. Single-family homes. If you have a single-family home and you're renting it out, that's a productive asset, technically. What happens if that renter loses their job and stops paying the bill? Now you've got a non-performing asset. There's too much counterparty risk. But if you focus on what JP and Adrian focus on, which is a very specific niche,
That's my point.
with 200 to 600 unit apartment complexes, for example, you can be 80% leased and still be making money. There's less counterparty risk there.
Well, Adrian, what about you?
If you look at the stock market, over $3 trillion have been pulled out of the market, and it's not going back in.
Yeah.
They're done. The cycle has changed. It's a true paradigm shift, which promotes positive change, is what you're trying to promote. I read an article that this generation coming into the job front, the first option is apartments.
Yep.
It's nothing to do with homes. We've been positioning ourselves, and we haven't bought. In 2008, we knew it's not the time to buy. You got to wait. Private lending is probably going to be the preferred method of purchase and refinance as opposed to banks. We have banks coming to us for deals that they cannot do. And the best part is they're waiting to do our takeout once we stabilize the asset.
Right.
So to have the power of being in the middle of all the transactions of real estate, there's plenty of money on the sidelines that can really keep the liquidity of the real estate going forward. And then, oh, by the way, we're also finding the right assets to purchase, to put away and hold for that cash flow, for that legacy.
Yep.
The
Awesome.
point is, real estate's not all equal. Don't get confused with the word real estate, as Sean is saying. That doesn't mean anything. Most of real estate will be anemic. I've seen 30% layoffs, even in Austin, of brokers who are industrial brokers, who are in other asset classes, who cannot keep enough business going right now because the demand is not there, even in Texas in certain areas. So I just say beware and really understand the difference of the niches, because real estate is such a broad category and there's different stories in every asset class that it's really important to understand. And there's other plays. It's not like we have the only play. We've just found a niche that works. And there's other niches that work. For instance, one example, medical, because our medical system is the one area in the U.S. that's expanding. Medical office condos, for some reason, the banks love because there's more medical and more infrastructure.
Yeah.
So there's a play in medical right now. But there's just niches, but most of it is, I think, will be anemic.
Yep.
And kind of very sluggish through 2012 and beyond.
Very good. Very good, guys. Awesome. Thank you for sharing your thoughts on that. Nobody said end of the world, May 21st, no aliens. We're good. Okay. That's all that matters, right? So, guys, this is it. We're headed toward one of these final two destinations, default or printing and inflation. And all you need to do in order to secure a sneak peek of, again, what that's going to look like is to glance over at what is happening in Europe today, go to the alternative news sites, and really get an idea of the reality there, because you don't see it through mainstream media here in the U.S. They have officially hit that inflection point. Do they default, and this is what they're going through right now this week, or do they print? That's what they're trying to figure out. Do we bail these countries out, or do we, print some more money and give them another loan? So I believe that they're going to print because allowing the banks to fail would trigger a global collapse unlike anything the world has ever seen. So you and your family really have one of two options. You can put your head in the sand once again and pretend that everything is going to be fine, in which case you stand a very good chance of losing everything that you have in the coming, I'd say, 2 to 5 years. Or you can acknowledge the reality we find ourselves in and use this foresight to turn this train wreck into the opportunity of your lifetime. And that is exactly what we've been doing over the past 12 months inside the Elevation Group. I've spent the past year on a quest to crack open the black box investment strategies of the rich in order to find out exactly what they're doing with their money today in order to end up on the winning side of the greatest transfer of wealth in human history. So in part 2 of this video series, I'm going to show you exactly what we've discovered with the help of these gentlemen up here and how these investments have performed in today's times of economic chaos. I'm going to show you how I've managed to create a $100,000 per month tax-free retirement foundation that is independent from the risks and crazy rides of the stock market with the help of Paul and Sean here. I'm going to show you a 3-part strategy that we created with the help of JP and Adrian that combines cash flow real estate, infinite banking, and tax credits, which is on track to produce a very safe and very conservative annual return of at least 27% using a real tangible asset. I'm going to introduce you to Dan's partner David here in video number 2, who owns a company that helps people like you free up the funds that are sitting in your IRA so that you can use that money to buy physical gold and silver or real estate if you want to, really whatever it is that you'd like to invest in before the government and the very real threat of them coming in and confiscating those funds in the name of the global good takes place. And it's a very real prospect that that will happen. We're also going to have an incredibly special guest with us via video, Robert Kiyosaki's personal advisor on precious metals, Michael Maloney, who's going to answer the question that's on so many people's minds today: is it too late to buy gold and silver? And finally, we're going to throw up the scoreboard here and go head-to-head, putting the strategies and opportunities that we've been using over the last year against the performances of the top 70 mutual funds in America, over 5,000 hedge funds, billionaire portfolio manager John Paulson, and even Warren Buffett himself and Berkshire Hathaway. So that's going to be a lot of fun. That's going to be very interesting. We're going to release part 2 on Thursday, December 8th. So mark your calendar and keep an eye on your inbox, because this video absolutely has the power to change your financial destiny and the financial destiny of your family. We're going to take all of the challenges we looked at today, and we're going to look at opportunities, and it's all about essentially real people and real results. And we're going to hear from a lot of people who have been a part of the Elevation Group for the last year and how they've done over the last 12 months as well. So again, Thursday, December 8th, mark your calendar. We will be back here again. Please, again, feel free, if you got value from today's video, to share this with those you care about using the Facebook like button below and the comment buttons. And we'll see you soon. Take care. Hey, Mike here with one more item. When you check your inbox right now, look for an email from me with the subject line of EVG. I should probably tell you the whole story. That email is going to come from my address, mike@theelevationgroup.net. Be sure to add that email address to your contact list or whitelist so that it doesn't end up in your spam folder. And all of my emails, including the ones telling you about videos 2 and 3, will have that EVG abbreviation at the start of the subject line. So be on the lookout for that. It'll make it really easy to see the emails when they come in. Now, when reading this first email, you're going to see what I mean by the whole story about how this whole project got started and why. So definitely take a couple of minutes to go through it. It's not very long at all, but it's critically important for you to get an idea of what this is all about, since this whole year in review series was really intended for our members only, but we decided to make it open to the public. We want you to get all of the details and the backstory about why you and I are sitting here essentially talking together today, and how our paths have just met. So thanks again. Be sure to share, like, and comment about this video below. I'd love to hear what you have to say when you're finished reading that very first email, and we'll see you soon for part number 2.